Hi, thanks for joining me in my market report. My name is Mike, and my market report is on mortgage rates. We kind of like to get into what's impacting mortgage rates on a daily basis, whether it's economic data, whether it's headline news or geopolitical news, or sometimes just the change of sentiment in the by investors in the market that could alter things. And we kind of try to give you the insight as to what's impacting them on any given day and what to look out for the week ahead. Now, uh, a little bit about myself is I am a loan officer. I do work as a work with a national lender. We here to help you guys out. If you guys got questions regards to mortgage rates or programs or anything of such that we can answer for you guys, feel free to reach out. We'd love to earn your business if you guys are looking to refinance or purchase. So please reach out. We do loans in all 50 states. So again, we'd love to hear from you guys. Uh, if you guys like these videos at the end, I'd greatly appreciate if you guys could smash that like button. It certainly helps out our channel. So in the meantime, why don't we jump right into it? We'll start with the economic calendar, and today happens to be kind of the big day. We got the jobs data for the month of September by the Bureau of Labor Statistics, or BLS as we sometimes say. We'll start off with the average earnings for the month of September. So August data was initially up at 0.6%. However, that got revised lower down to 0.4%. Forecast was calling for 0.4%, came in at 0.6%. So we kind of have that almost flipped from August to September, looks like. Yeah. Now, here's the number we're kind of really looking for. This is the non-farm payrolls. So last months, back in August, it was initially came out at 235,000 new jobs. However, it was increased to 366,000. So pretty big difference there. 131,000 new jobs were created more than what they did. However, that is still a pretty big miss. If I recall, they were still looking anywhere between 7 to 900,000 new jobs at that time. Now, forecast is calling for about a half million for the month of September, and we got another huge miss here at 194,000 for the month of September. Now, the average work week for the month in hours for the month of September, we had in August at 34.7. However, that got decreased by revision at 34.6. So it was supposed to remain unchanged at 34.7, but it increased to 34.8. Um, and then we got the unemployment rate. So it went from 5.2% in August. Forecast gone for a slight dip to 5.1, and it dipped much further to 4.8. And then we got wholesale inventories for month over month from August. So in July, it was up 1.2%. Forecast gone for 1.2%, and it continued that same trend at 1.2%. Uh, so a little touch on the job data here. Now, part of it, we're seeing, of course, a number of things. We're seeing the changes regards to. Sorry about that. I got a little distracted by that reprice for the worst, but we'll touch on that a little bit here. But the if you look at the jobs data, we keep hearing the great resignation period. So we got people who are resigning and looking for, for whatever reason, they want to change jobs, whether it's for better conditions, better pay, maybe they want to be independent. We're getting kind of a combination of things out there, in my opinion. And of course, we won't probably see as much on September's data. Might see it more in October. But we got people who are being laid off that are refusing to get vaccinated. They won't be on the unemployment data as they're being refused any unemployment benefits. So this will be kind of interesting to see how this plays out. But it'll probably come in with weaker jobs data, meaning that weaker in terms of new jobs being created or at least being hired. So this will be kind of interesting to see how that plays out. I think October you'll see more of that. You're starting to see more and more of these. You had, like, for example, the large New York health provider laying off 1,400 people. You've heard a lot of medical places hiring from. I think in Houston there was even a Methodist hospital that laid off like 100 people. So it's not going to be probably a huge number, but you may see somewhat of impact on that. And then of course you got the people who are resigning and then looking for some changes in their work life uh, and until they find that. So it'll be interesting to see what we can find, what we come up with over the terms here. But in terms of this non-farm payrolls, it is affecting the market. Stocks are pretty much for the most part are down. Dow has been kind of tiptoeing back and forth into positive territory, and then also negative territory. Uh, However, again, we've had two pretty bad months. They don't know if that's enough to change any alter the Fed's plans. It may not be big enough to alter the Fed's plans for tapering, as a lot of people think they should still continue to taper. But it's creating that uncertainty is creating money coming out of the markets for the time being until they decide where to place it, and probably even wait to hear some Fed speak on that to hear their opinions on that. So right now you're seeing stocks down, and of course, right here we're seeing mortgage-backed securities down as well. We're down about 14 basis points. You can see the line which we were up earlier. So this is why you're seeing some of the reprices right now. As we were up earlier, we're down even further than the 14 from yesterday, as we were in some cases, some people came out with rate switch when it was up here, and then it's even down further. So therefore, they're coming out with worse rates. So therefore, about 1/8%, depending on when they came out, could be even 1/4% rate change. But from yesterday's price and close, we're approximately about 1/8 difference in our pricing and rate. I mean, 1/8 of a rate difference in our pricing here is what that kind of translates to here. All right, so when you see these basis points, what they translate to is the cost. So like 100 basis points translate to 1 point on there. So this is like 0.14 basically in our pricing. It could make the difference of approximately, well, I'm sorry, yeah, 0.14 basis points. So it could make almost 1/8% cost difference on here. So here's how it kind of looked like today. So we had upwards as we saw there before, and then I saw that a wick there, and then we kind of quickly dropped. And you saw this huge drop here, right around 8 something, 8:30 probably. We had the this big drop here, about 8:20 says right there, and then worked our way upwards a little bit. So we're kind of off of both levels here, but again, as you can see, it's uh, trying to work its way back, and we'll have to kind of wait to see what the market dictates later on. But right now, that uncertainty we're seeing some uncertainty in the markets, and same thing with treasuries. We're reaching points we haven't seen since June. Up here, we've kind of broke above this level. We're hoping this can come back, or at least whips out backwards. Hopefully, get back lower to these levels here, so we can see some of those rates again. But right now, we're touching at just below 1.61 right now. Yeah, well above this level here. Of course, we haven't seen this broken yet. All right, so it's pretty close to about the end here. We'll end it here with the national averages, 30-year fix at 3.15, and the 15-year at 2.52 currently. And of course, these do include points in there, so just kind of give you a heads up. These are kind of the national averages that are out there for each conforming loan limit out there. All right, folks, I hope that gives you the information you need. If you guys got questions, please feel free to reach out. I'm here. I always like to chat about these type of things. If you guys need any help, ask. We're here. And as well as if you like this videos, please smash that like button. It helps us out. We greatly appreciate it. I hope you guys enjoy your weekend. We'll catch you guys on Tuesday because Monday will be Columbus Day and it'll be a federal holiday, so the markets will be closed. So we'll catch you guys on Tuesday. Thank you so much. Enjoy your weekend. Bye-bye.